everyone. Welcome to your latest Carson's Take 5. Ryan and Sonu here. Sonu, we're talking about why the surprise summer rally can continue. Yeah. S&P up, about 6% in May. We just finished June, up like close to another 5% in June. We've been bullish. I think even we are a little surprised how quickly stocks are in a near bear market and have come back to all-time highs.
Exactly.
Why do you think we've come back so quickly? Then we'll maybe talk about also kind of why we think this rally can continue. Why is this one of the greatest comebacks ever in 2025?
If you rewind back to, obviously we had Liberation Day. Then we had Liberation Day that was canceled or postponed. I guess technically postponed.
Postponed, yes.
And July 9th is the deadline. So my guess is that's going to be postponed again. And then we had the China tariffs were canceled as well. So we got some tail risk really taken off the table. It's like, okay, maybe they won't go through extreme tariffs, right? And then over the last 2 weeks, two things have happened. One is inflation data over the last 2 months has come down, come off the boil, so to speak. And everyone is, I think, expecting tariffs to really push up inflation. That could still happen because you and I know that inflation data, official data is weird and all of that. So it could be like, don't be surprised if 3 months from now it suddenly shows up, right? That's how crazy official data is. But for now, it's not showing up. So what does that mean? That means rate cut expectations from the Federal Reserve have gone up.
Yeah.
That's a tailwind, right? Especially over the last 2 weeks. And now markets are expecting about 3 rate cuts in the second half of the year. Think about that. 3 rate cuts. If the Federal Reserve drops interest rates by 0.75%, over the next 6 months, that is a big tailwind. And then the other tailwind is, you and I have talked about this before, Congress is on the verge of passing a massive deficit finance tax bill. Deficits, all else equal, are good for profits. Now, there could be issues with interest rates and stuff because deficits are high, but I think those are 2 tailwinds that have been driving markets to all-time highs, especially over the last 2 weeks.
Exactly. You think about sentiment, right? If everybody's thinking alike, somebody isn't thinking. General Patton, this time, approximately 3 months ago, we were told there's a recession coming. We were told there's a bear market coming, and we were pretty much in a bear market. So I'm not going to minimize that one.
We're supposed to be in a recession right now.
But we were supposed to be in a recession right now, and it hadn't happened. One other positive, earnings, right? Earnings were actually really, really solid overall in the second quarter. And then you look at kind of second quarter guidance. I mean, companies have actually increased guidance. So things aren't perfect. There are cracks. We get it. But overall, the economy came in way better than expected. Inflation's better, and the Fed might be cutting. So, let's talk. So that's a good roundup there. Let's now kind of finish it with this. I'm going to call it surprise summer rally because most people didn't expect it. Why it can continue. A couple things from me, Sonu, then I'll turn it over to you, and we'll end it here. July. Never invest blind on the calendar. I want to be very clear there. But these are important to note. July has been higher for the S&P 500 the last 10 years in a row. That one more would be 11 if my math is right, tying the all-time record from the 40s and 50s. The last 20 years. Best month for stocks, July. The last 10 years, second best month, and in a post-election year, July, once again, is the best month of the year. One more stat here. When you're up in the normally weak-ish May month of May and month of June, like we just were, up 2 months in a row in a normally weak period, the rest, July actually is better than average, but the rest of the year, Sonu, is higher like 15 out of 16 times with extremely strong performance. So one more for you. When the first quarter is negative, but the second quarter is up over 10%, like we just saw, very small sample size, only happened like 5 or 6 times, but the third quarter's never been lower, and the rest of the year is up almost an average of 20%. No, we're not calling for a 20% rally the final 6 months of this year, but what we are saying is this flush out we had, in the first quarter, this rally in the second quarter, this rally, this bull market very well can continue, and why we continue to be pretty optimistic. What else you want to add here, Sonu, before we wrap it up?
What else did well? If you just close your eyes on December 31st, 2024, opened at June 30th, stocks are up 6.2%, bonds are up close to 4%. That's pretty good. That's slightly above average. That's not bad, right? Forget everything that happened, right? So we're on track for a reasonable year at the beginning of the year in our outlook. We said there are opportunities in the form of rate cuts, in the form of tax cuts. That's playing out right now. But we also said there are threats, right? And risks. There were risks of elevated interest rates, right? Hurting the housing market. That is also playing out. There are the threats of tariffs that happened earlier than we expected, but that's happened, right? So in a way, it's all playing out. And at the beginning of the year, Ryan, would it be called for stocks to gain about 12 to 15% this year?
Yeah.
I dare say we are on track for that.
I think we are. We're about halfway there, but that's a great point. Bonds have had a pretty solid year, all things considered. And like we talked about a few minutes ago, maybe a few more rate cuts. Remember, interest rates down, yields down, bond prices tend to do better, go higher. So, that's nice, but also commodities in general. I mean, trust me, you can find some commodities that haven't died. No, eggs have come back. I even saw Waffle House had that surcharge on eggs. Yes. They're taking the surcharge off of Waffle House. That tells you, but for the most part,
interest rates.
Yeah, exactly. Now, gold's up, but obviously oil is a very important commodity. That one's lower, but a lot of commodities are higher. So for a diversified portfolio, commodities done pretty well overall. International's done well. U.S. is coming back. Bonds done okay. All in all, it's been a really solid, I think, first half, given all the worries and concerns that are out there. And the good news, Sonu, what is next week on the Take 5 video? What are we going to discuss?
We will have our outlook, a mid-year outlook for 2025. Keep an eye out for that. That's looking really good already. I mean, obviously we're biased, but I think what's interesting is this year has so far played out the way we kind of thought it would play out. Now, the sequencing has been different. We didn't expect that, but I don't think anybody expected that. So, in a way, it was almost like, okay, what new do we have to say? What else is new, right? And I think the second half can be quite different from the first half in terms of volatility. Doesn't mean there won't be volatility, but, I think it should be an exciting second half, and I'm excited for the outlook to come out next week.
I'd like a calm second half, to be honest, after the last 6 months, really last 3 months that we've experienced here. But all in all, listen, things still look pretty good. Economy's pretty solid. Maybe some cuts coming. We're going to keep doing these weekly Take 5 videos. We appreciate everyone watching them. And again, next week will be the Carson Investor Research mid-year outlook. Stay safe out there. July 4th. Actually, by the time people hear this, I guess, will July 4th already happen? Maybe not. Yeah.
Probably
maybe.
Will be July 4th. So happy July 4th.
Yeah, happy July 4th. Hope everyone had a happy July 4th. And again, it's summertime. Get some vacations. Go and enjoy yourselves. And again, we'll be here every single week doing these. We'll see everybody next week with the mid-year outlook. Take care. Thank you.